let me do a quick exercise here in terms of trading and thinking in probabilities. What would you prefer? A sure gain of $700, or B, a 75% chance of gaining $1,000 and a 25% chance of gaining nothing? So for this one, most people will choose option A. There's not necessarily a right or wrong answer, but most people will go for A because they tend to be risk avoidance. People tend to risk avoiding when it comes to gains. So preferring to hold onto the bird in one hand, essentially. This is our human nature. So once they have something, they are violently opposed to risk of losing it. People would prefer to go for the sure thing. But as traders, sometimes we just need to we need to think in probabilities. We need to, over the long run, we need to think about our winners being bigger than our losers. So we need to take that chance. We need to trust our edge.
Well, in this case, I'm sure you gained 700. Means there's 100% probabilities that you make 700. Yeah, if you're thinking in probabilities, you haven't mentioned that in there. Obviously not. But is that for me, what is important? If you have a strategy that after many years of many strategies, more than 270 strategies, if you actually have a strategy that doesn't give you losses, if I don't have loss of a trade, the surprise will come, and the loss will come when I do not expect to come. So if I don't have losses, and I don't have that percentage of probabilities how much I can lose on that strategy, I will not be happy to take that strategy. So that's why I went from B. But in the reality, if you go 100% probabilities to win 700, that is actually quite interesting. The question is when that loss is going to come and what percentage is going to come in there on the loss. That is the key element, is missing the percentage in there. Obviously, then you choose B. But if you go percentage on A, then you need to question, okay, I go 100% on this strategy, 700. What actually is the negative part of? You need to think about that as well. That's how I was thinking about it.
So that example there was based upon risk avoidance. Now, let's talk about risk seeking. So in this example, so option C, a sure loss of $700, or option D, a 75% chance of losing $1,000 and a 25% chance of losing nothing. So most people would choose option D, and I'll tell you why. And it's because people tend to be risk seeking when it comes to losses. So they would rather risk a big loss in preference to suffering a certain moderate loss. So this is how gamblers get hooked. So once they have made a loss, they keep gambling and sometimes even increasing their size in trying to avoid the loss. And how many times have we been, I've been guilty of this in my trading. But so this exercise is just something to think about in terms of how to calculate probabilities, how to think in probabilities, and how to have the growth mindset in order to be practical in the way that you improve, in the way that you can replace those old habits, the mistakes that you keep having, and doing so with writing in your journal on a back test and on the forward test.
Okay, so shall I give you the right answer?
Yeah, sure.
So the right answer is none of them. Let me explain to you why. Okay, what actually for this exercise is actually correct, to go into this deep analysis or psychology analysis. But the correct answer is none of them, because none of them is actually fitting my personality. So it's not about only probabilities. It's about personality fit into that probabilities as well.
Yes.
So you can actually say, okay, this and that is made the best option possible, but it's the reality is that your base strategy, and the reality is that is not in this case, because I haven't back tested myself. I haven't seen what are my reactions on this back testing strategy. So I will not choose any of the 4 strategies. I will choose none of them. So that's my right answer. But for the exercise, obviously, those ones that are the correct ones. So.